Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the Coinbase chart. We covered it, I think, already last week, a week ago, and the market now dipped into our trading area. So I think it's time to update the chart, take a look at, if there is a good chance for a reversal. Let's go. So we are on the Market Intel website, dailymarketupdate.com. Don't forget that you can actually register here completely for free and you get access to all of these Elliott Wave updates. We want to take a look at our tech package today. So we click on that, go to our analysis, and we click on Coinbase, and then we can select the daily chart and the 4-hour chart here. So what we do, we select the daily chart first. First of all, that gives us a good idea of the overall context and also what the targets, let's say the long-term targets are. How long will it take to get there? It's impossible to say. Elliott Wave is really good as a price-based system. It is not so good as a time-based system because it just takes as long as it takes. I mean, overall, it gives us very important risk levels, really key support levels, key resistance levels, places of where the price should turn around, but it takes as long as it takes. That's the thing. There are some, there are some guidelines that can be used, but it is not very reliable. So we focus on price. Let's take a look here at the daily chart. So what you can see is that the $70.76 level really is the important invalidation point for the overall assumption and thesis that a third wave could have started already. That third wave likely started in October last year when the price, bottomed there at $70.76, and we could be working our way up now in a third wave. At the time, the idea here is that a triangle pattern formed in a wave 4 and the fifth wave to the downside was a so-called truncation. And we're now moving up in an impulsive structure in a third wave that could take us into the $700 region. But that's long term. First of all, we need to break above that, or the bulls rather, need to get the price above this $429.54 level, which we call wave 1 top. Okay, so the idea is this was a wave 1, wave 2 correction, and we're now in a third wave rally to the upside. And typically in a third wave, we want to see the price get to the 161.8% extension, and that is around $720. That's normally the minimum expectation for such a third wave, but can definitely go higher as well. But this is long term. So I think we now need to take a look at the 4-hour chart. Here in the last update, I highlighted to you and explained that we're tracking this structure from the low in October last year as a 1-2 setup, which is a very bullish structure because it could lead to a breakout in a third wave to the upside. I already talked about this trading area here in the last update, and the idea was that we go a little bit lower to test it, to get there, and ideally to get a reversal. Now at the moment, we have already seen an initial reaction to that support region, to that trading area. Important, I think, is to highlight that below $134.06, which is the 88.7 Fibonacci retracement of orange wave 1, well, a break below that will make this bullish 1-2 setup and the bullish outlook, the directly bullish outlook, less likely. But at the moment, the idea is, we have a good chance of holding it. $134 is key support. We also have $151.53 as support there, and only a break below the orange support region will indicate that there's a risk of invalidation. So invalidation means that the setup here is not valid anymore. Below the support region, there's a bit of an area we could call no man's land, where we have a bit of wiggle room, but below that level, the $114.52 level is the invalidation point. So that's an absolute key level. And if the market can really turn around here, then the $323.70 level is the next key resistance above. So important is now that here something happens and we'd like to see a reversal to the upside. The price, when it dipped into this reversal area, into this trading area, did not react to any Fibonacci levels. So it seems quite likely that we might get another low targeting $151.53. That's the 78.6 retracement. That's the ideal scenario. So at the moment, in a perfect world, the market would dip once more. We see that likely, and we assign a 67% probability to that scenario. If we turn around already and this week we see a surge to the upside, then it would increase the probability of a direct breakout. At the moment though, we would assign a 33% likelihood for that scenario that we're already breaking out right now without another low. But we're talking about upside from here, either directly or after one more low. So quite a bullish outlook on Coinbase. That's the update. Hope you liked the update. If you did, please hit the like button and subscribe, and also let me know in the comments which other cryptocurrencies or other stocks or asset classes you want me to analyze going forward. And yeah, have a great day. Thank you very much. Bye-bye.